Now, Apple has been playing in a league of its own lately, but the Japanese electronics firms, they're trying to get back into the game. Here to help us handicap the prospects for companies such as Sony and Nintendo, we have Melissa Otto. Melissa follows the industry as a director at TIAA-CREF Investment Management, where she oversees Japanese equities across the consumer industry group. Melissa, good to have you with us on Bloomberg. What's the outlook right now for the Japanese consumer electronics business? I mean, they were once dominant in a play field that now really counts Apple as the leader.
In an iPhone world, the game has really changed. And I think there's going to be winners and losers, period. I think Sony looks quite well positioned here. They had a great quarter that came out last night. We saw LCDs showing really great growth, their games business getting back on track. And we have to ask ourselves, wow, could this be a time when Sony could differentiate itself from Apple? And then on the flip side of that, we saw Nintendo really delivering a much worse than expected quarter. And it makes me wonder if the casual gamer really cares about the DS and whether or not they just would rather play games on their iPhone.
Now, when you talk about Sony, you've got to mention Sir Howard Stringer, right? Because he was brought in to really turn the company around. He's gotten rid of a lot of workers at Sony. What are they going to focus on in order to regain the magic, so to speak? Is it home? Is it a high definition in the home? Is it 3D? What are they working on?
What we think is that the company is really going to position its TV business and bring the connectability of its content into the living room of consumers, not just in the U.S., but also in emerging markets. I think it'll be the combination of strong housing markets and emerging markets, and then that combined with real demand for a television that can connect to the internet through a wireless network. And I think consumers will really want that, and they'll want that content to come through. The combination of those two things should hopefully get them to that 25 million units growth that they're expecting.
Now, Apple, with its iTunes store, is really just a middleman for content. They deliver the content, whether it's music or video or movies. But with Sony, they actually produce content that they hope to sell through iTunes and other mediums. Are they going to be able to make that content bet pay off?
That's what we're hoping for. And one of the things that I'm really looking at within their numbers is that could be a real differentiator for them. We think, relative to the Samsungs of the world that are really hardware manufacturers and technology companies, they're not really content producers, whereas Sony really has a combination of both, and the ability to synergize those two could really deliver some OP margins that are pretty attractive longer term. So we'll just have to wait and see, but I'm certainly hoping for the best.
Was that one of the issues with the hardware manufacturers, with companies such as you said, Samsung and Sony, that all they were really interested in was whatever they could do to get people to buy more stuff, buy more hardware, whether it was a Walkman or a television or some kind of CD player, that they really only focused on the hardware, the electronics hardware. They didn't understand the connection with the content and the hardware.
I think that's true. The overall technology and the installed base, combined with wireless networks and getting consumers to understand that they can take their hardware, the content, and then connect with other consumers to it. And I think one of the first areas that we've been able to see that successfully done has been in video games, where you see consumers using their Xboxes, their PS3s, going online, playing things like Call of Duty. I recently read a statistic that the average consumer of Call of Duty plays 100 hours online.
100 hours online against other players.
Exactly.
So is this a situation where Sony will act almost like a toll keeper, that they will have a charge for every time you go online and want to play against someone else somewhere in the world?
That's what we're hoping for.
And what about Sony's ability to fund this turnaround? Do they have enough money on the balance sheet in order to keep going for at least 1 or 2 more years, waiting for this to happen?
One of the things that we really look at is going through the balance sheet, the fundamentals, and really trying to understand how management is going to integrate the two and what their cash flow is going to ultimately deliver at the end of the day. And in our process, what we found is that it looks like they're quite well positioned strategically and competitively.
What about 3D? That seems to be the future for a lot of hopes and dreams when it comes to hardware manufacturers. Is 3D really the answer?
3D, I think, is a fascinating technology. The ability to play video games, watch movies, watch sports in one's living room in 3D is really a very unique concept. I think it's going to be interesting this holiday season as Best Buy is making quite a big push for this technology to see how the consumers really warm up to it. Are they going to react? Are they going to come into the stores and buy new units because 3D is pulling them in? There's a lot of debate about this. We're really playing a wait and see with 3D.
I'm glad you mentioned Best Buy because that highlights the retail end of the situation for Sony. Are they going to have to go head-to-head with Apple and open a lot of retail stores all over the world in order to really compete with Apple and its iPhone and its computers as well as its other mobile devices?
It's a great question. We're really watching that carefully. My sense, though, is that Sony has quite good distribution, and I think they have pretty good relationships with their current vendors. I could maybe see closer relationships with those, but it's anybody's best guess to see how that plays out.
Do you think that Sony is going to axe some types of products that aren't really meeting those margin requirements because they make a lot more than just television sets?
One of the things that I really focus on in the process is really trying to understand where their operating profit margin expansion is coming from. And clearly, seeing better returns on products, seeing better investment, a more efficient working capital, seeing the fact that they're getting better pricing on raw materials, all of that sum total net should give us a better operating profit margin. And I believe within that, we should see a better product mix. And I think from this quarter, we already started to see some evidence of that, specifically in LCD TVs and also in games.
All right. I want to thank you very much, Melissa Otto, coming to us from TIAA-CREF.